Hi everyone, JJ here. Welcome to Stock Chat Show number 1, the first one of these vertical format shows. I'm just trying, always innovating here, and I'm just going to get things organized here. I can hear something in the background here, so I'm just going to have to turn that down. Let's just see. Let me get organized here. There we go. So I think we're live on Instagram, we're live on YouTube in the vertical format, so it goes into the shorts, I think. So if you're seeing this on YouTube, welcome here. And it's also on X. We're live on X. I'm just going to check that is actually the case. So I'm streaming to X and to YouTube and to Instagram live in the vertical phone format. Welcome everybody to the very first episode. Yes, it's working on X. Hi, those people on X. I'm going to be doing these on a pretty daily basis, I think, for about a month and see how it goes while the stock market's open. It's coming up to stock market close, so we'll see how we go. But I trust everything is working. I wish I could stream to TikTok as well, but they won't let me yet because I don't have enough followers on TikTok, but we'll change that. I'm going to be doing some TikToks during this. But let's get to the news here. You can see here the stock market news for today. I'm just going to make that bigger because I can't see what's going on. What we have here, I'm sharing the Yahoo Finance news. Tesla stock jumps on report. Trump could ease self-driving regulations. And Tesla's up 4.96%. And we're less than half an hour away from the market close. So I believe there aren't many stocks that have jumped today. We've got the S&P 500 0.43% up. The Dow Jones is down a fraction at 0.15. Who cares about the Dow Jones these days? And the NASDAQ 0.65% up. So if you're joining me today, this is what I'm going to be doing. I'm going to be catching up. What I usually do first thing in the morning is just catch up on the stock market. I know as a long-term investor, it's not that important, but obviously, I mean, I like to do it. It's kind of, fun and informative. The Russell 2000 is 0.26%, so it's jumped a little bit too. I hope you can all see that. If you're watching this on your phone, you'll be able to see it. See, there's a couple of people watching. I've got comments here, and I see a few people there. I'm going to say hi in the chat. So hi everybody to joining me there. I don't know where you're joining. Oh, YouTube. I see that you're on YouTube. So hi there. So this is on the Stock Chat Show channel. I've changed the name from Stocks Today with JJ. So I think, part of the reason of doing this vertical format is people can watch on their phones. I don't know where you are. Hopefully you're not driving right now, but even if you are, you can listen to it. And for the algorithm on YouTube, I think it just picks it up. It's in the shorts feed, so it's kind of different than a full live stream, which I have done before, but I think I might prefer this format. We'll just see how we go. And I see people joining. That's great. Hey there, everyone. Can you send 1 million? Somebody says, no, I cannot do that. I'm going to show that on the screen to see what happens. There we go. So the comments come up. The top of the screen, I can do that. I'm not sure can get Twitter comments actually, but that doesn't, well, I don't know if I'm doing it through StreamYard, so I don't know if that's the case. But hey there, everybody, let's get on to some news. I will monitor the chat to see. Can't post comments to some destinations, it says, so I don't know if you can see that, but I've got all up, and you can definitely see it on YouTube, I know that much. So yeah, my Trump trade went bust with the consolation price. So what happened? The Trump trade. So the market is looking pretty expensive in the US. Other markets, not so much, but the US and especially tech has been roaring after Trump won the election, but it started to go down. There was that massive bump. What I understand, I've seen charts, a lot of it was retail investors piling in, on sort of hopes, I guess, of what's going to happen, but the stock market wasn't exactly doing badly before that. So we've had this massive pile in, and it's now pulling back. Tesla, not so much. And we'll have a look at some videos today as well of catching up with the news, but I'll just see some of this latest news here of let me see. Somebody's asking here, why do you focus on US politics? Are you a citizen? Is it just because it's lucrative for you? It's not lucrative for me. I'm not making any money out of this video, I can tell you that. And this channel, Stock Chat Show, is not even on YouTube. It's not even at monetization, so I'm not making any money out of this. I just, it's fun for me, and I want to do it. I have the other channel, it's the Art of Value, which is monetized, and it's focused mainly on Tesla at the moment, Elon, because he's become so much a part of US politics, US business, and that there is an audience for that. But I do think of things as a business, so if this turns into that, then fine. But this is just fun for me. This is what I do in the morning, looking through the news, so I thought I'd share it with you. That's it. So, it's not about the money. Look, if you've ever run a YouTube channel or social media, you know that it's pretty hard to make money at. So it's not the primary concern here, I can tell you that. But I am an investor, and I catch up with the news every day. So let's carry on with some of these headlines here. If a lot of people don't have time, but they might be listening to this or whatever. I might be able to see this on the phone, but they might not have time to cruise through the news like I do. Let's see. So this is apparently the latest news. See if there's anything here that is of importance. Boeing Company, I clicked on that by mistake, but let's see that. It's actually 2.46% today, but if we go to the year to date, it's down 44.89% year to date, Boeing. Oh, it's brutal, isn't it? They've had a bad time, but, it's self-inflicted wounds. If we go back to the 5 years, we can see it's not had a good run. Anyway, let's go back to the news. Oil rises as geopolitical tensions outweigh weak market signals. What else? Trump went bust. Seen that? What to know about Chris Wright, Trump's choice to run for energy department? Okay, so we're getting this news of Trump's who is appointing. We've got Kennedy there, who is going to be the health thing, and then you might have seen that photo that went virally around of him sitting on, I guess it was Air Force One with Trump and Elon, and they were eating McDonald's. So he's the health guy, and he's got this kind of grimace on his face, trying to smile. Where maybe the health is going out the window. I don't know. I thought that was pretty funny though. Is he actually going to be able to do anything? So stock market news, here we are. I'm just going to show and see on screen if we can see that. We're going to be watching some videos. And if you want to hang out, I'm going to be here for a while. I'm here all week. Try the veal. Roll my sleeves up here. I'm in my studio. It's morning here. So as the market closes in the US, it's morning time for me. So it's coinciding quite well. It's actually around going to be 10 a.m. when the market closes for me here. And I know, obviously on the East Coast in the US, part of the reason that person asked, why I focus on US politics. I mean, I'm focused on the US market, not politics. And so it's part of that. And I am invested in the US market, heavily invested in the US market. So as well as have global stocks. If you, my Patreon members at the Art of Value Patreon kind of know my portfolio and what I'm invested in, but it's global. But US is a big part of it, and it's the biggest market. All right, so what else? We'll go through the news here. I am fully caffeinated, but I don't want to be too, I want to hang out here for a while, so I don't want to get too tired. I got stuff to do this afternoon, so I don't want to burn myself out on doing this live video. But I do want to share with you what's going on here. Wall Street forecasts normal year for stocks in 2025. Nobody knows after historic rally. Yeah, it's had an incredible rally this year, like last year and this year, kind of record years for the stock market over time. If you go back and see what the gains have been, this year's been a fantastic year. People were kind of already forgetting that. They know their stocks are doing well, but 2 kind of record years, really good years in a row. So they're kind of guessing that 2025 will pull back a bit. But nobody knows. Nobody knows. Morgan's. If this turns into a bubble, if you look back at the .com bubble, if this is AI related, these record results are partly that AI rally, and we've got Nvidia earnings coming up this week. It's Wednesday US time. I'm a day ahead here, so I'm living in the future here. But that is going to be, is it going to nuke the stock market, or is it going to propel it higher? We'll have to see. But that's really going to be the big thing for this week. Stellantis CEO says will adapt to US market under Trump. Okay, we'll see. There's obviously going to be tariffs on Chinese-made vehicles at 100%. Are they going to? He could even increase that. Is Elon's in there with Trump? That's when that person asked me. You asked me about US politics. Okay, so it definitely, affects the market with Elon there being basically the co-president at this point. So, it's going to affect other companies. And I'm making a video about humanoid robots, and that's to do with Tesla as well. And, there's word there that Tesla is coming up to showcase their robots at a next level. You're actually doing stuff in the factory. And so that could boost Tesla stock, or the stock market could crash. I'm not here to predict anything. So that's the normal year next year for 2025. We don't know whoever said that. Morgan Stanley raises base case 2025 year-end S&P 500 target to 6,500. Okay, fine. S&P 500 24. I mean, these predictions, they're so often wrong. If we go back a year and see what predictions, but they've got to have the news, don't they? US labor market still boosting inflation. San Francisco Fed economists say. The Oracle of Wall Street says home prices need to fall 20% to end the generational schism. Who's the Oracle of Wall Street? It's not the Oracle of Omaha. I don't know who they're talking about. I'm not going to click on that. It's not worth it. So earnings, yes, this week we've got Nvidia. Nvidia stock sinks on reports of Blackwell AI server issues ahead of earnings. Okay, so yeah, that's the big one. As I said, that's the big one for this week. Nvidia earnings. It's going to be fascinating to see what happens. What do you think about this? Let me know in the comments here. Do you think that it's going to go nuts? Is it going to be good earnings, or is just expectations way too high? Has it become way too high? At some point, my feeling is at some point it's going to break. This, the expectations have come so high. The stock is so high, has become so high that, any kind of minor disappointment here in terms of, if their earnings slow down, whatever. It has been a cyclical industry in, historically. But your guess is as good as mine when that's going to happen. What's going to happen to Nvidia? If it's going to propel the market even higher, we could have a multi-year run going into something that's bigger than the dot-com bubble. We could have. My feeling is that embedded AI into robots is kind of the next thing. Is that going to be further away, or are we going to get some surprises there? And is that going to launch the market even higher into something that is akin to the dot-com bubble in 1999? So this could be a multi-year run, or Nvidia could come in with bad earnings and it could be over, or we just don't know. This is how, a lot of the news programs just predict stuff. You just can't predict. I always say that, people like, what's that? Tom, what's that guy's name? Tom. I slips my mind for a moment. I'll think of it in a minute, but he's always on CNBC, and we'll see some clips of making news today. But let's just go through these headlines. Walmart expected to post another strong earnings. Okay, we'll see. And Walmart down fractionally today. Okta post Q2 earnings, sell, buy or hold, ? It's down at 1%. Wall Street mixed as investors await Nvidia earnings. Yep, this week's all about Nvidia. It is, and so that's Wednesday, and I'll be covering that on Wednesday. I'm got a bit of a sore throat today, so hopefully I will. But I'm planning to do these vertical stock chat shows daily. Actually, I can also have guests on here. I'll think about doing that over time. Here we go with the earnings. We've got an earnings calendar here this week. We've got Walmart, Xpeng. That's interesting, and they've got a robot out. They've got a humanoid robot out, and their cars are not bad. They're becoming a real competitor, I think. BYD being the biggest one in China, and that's actually a video. So that's the week. Supermicro stock pops. Why? Wall Street awaits Nvidia. So Supermicro, I made a video about this. Actually, I'll show you. I'll go to here. Let me just find it. I'll share the screen here. So this is the channel. So you would have seen the last video here that I made was on Stan Druckenmiller's AI thesis. He was invested in Nvidia. He sold out, and in this video, it was like an hour-long podcast, which I took a few clips off and reacted to, where he was talking about AI and his thesis for AI. He's one of the best investors of all time, or in the last few decades for sure. 30% compounding a year over like 3 decades. He's never had a negative year, never, not even in those years that were down over 50% in the market, say in the global financial crisis. So he's an incredible macro investor, and he can change his mind on a dime. But he was Nvidia. He sold out. He said that was a mistake to sell out when he did, but he couldn't believe how high it went so quickly. Sold out 8 or 900. He's kicking himself for not staying in it, but he did go through the dot-com bubble and actually lost a lot of money in that. If you've seen him talk about that, it's one of his favorite stories, where he was in the dot-com bubble, made a lot of money from it, and then sold out. He sold out, and then he had a couple of analysts who worked with him. He was working for Soros at the time. He had a couple of analysts working for him, and he said they were making 4 or 5% a day, and he couldn't stand it. And he went back in, and he said it was a joke, but not much of a joke. He said he might have missed the peak by about an hour after that huge multi-year run up, and then it started to go down. This was like a Soros fund for Soros that he was working as a younger man, much younger, and so, but what happened was he made it back. He lost a lot of money there for the fund, and he took some time off. Said I've kind of lost it. He took a sabbatical of many months, went to Africa with his family, did the whole safari thing, and then he came back, after as the dot-com bubble was imploding, after losing a lot for the fund. He cleared his mind, and this is a lesson for investors, I think, long-term investors. So he cleared his mind, went to Africa, had a holiday, came back, and the macro things he was seeing at the time, he saw some opportunities, went back in and made a lot of money. So he lost a great deal of money when the bubble went bust, but he made it back. So within it, that's when I said he has a negative year. That's the kind of thing that he does. He'll lose a lot, regroup, and go back in, and this is trading, and he made a lot of money in that same year, and so he didn't have a down year even as the dot-com bubble imploded, because he just had that breakout. He said some of it was luck, but not really. He's pretty modest about that. And so that's the video about Druck, and then before that was about micro, what's his name? Supermicro, super fantastic Supermicro. Dodgy AF. What's going on there? I can't believe that it's actually going up. It's not. I'm not giving any investment advice, but they've had problems before, and they're having similar problems again. So I'm just steering well clear of that. But I did make that video if you want to see that, where the accountants when the accountants resign, and they're like one of the big accounting firms, they're like, no, we don't want to sign our name to this. We don't want to have anything to do with this. Goodbye, and the company's like, and the things that they cited in there with, related party to family kind of things, and like this, I can't believe that it's gone down, and it's been kicked. It's going to be kicked out of the S&P 500, isn't it? So Yeah, not good times, but it's and this is what you get during these exuberant times where people would just rush into them. I know on YouTube there was like Ticker Symbol U did a video about how sort of great he thought it was, and almost recommending buying it, and sort of backtracking on that, just like he did with Ark. I don't want to be critical of YouTubers, but there are some, you have to be careful out there. There are some scammers out there. There are some people. When you talk about, you just somebody said to me, "Are you just doing it because it's lucrative for you?" I mean, he has a channel of hundreds of thousands in it. He took 47,000 US dollars to do a video about that AI related company Poet. So you got to be careful out there. You really do. There are some real dodgy characters out there. They smiling face, happy. Yes, I'm helping, but you've got to be careful, especially on YouTube and TikTok and all those places. I wonder how it's going on Instagram. I am live on Instagram. I'm not sure I can see. It's gonna. There's not much of a following there. Most of the following so far is on YouTube. But as I said, I'm live on Instagram Live, YouTube Live, and X Live. So hi to everybody on those platforms. And I want to go live on TikTok, but I can't yet. So at some point when I get the sort of coordination effort together, I'm going to do a TikTok video live here just on my phone as well, just to ask people to get to possibly follow there, because I need more followers over there, so I can do live over there too. I want to be multi-platform here. Bit of innovation going on here for me, but we'll see. I don't know if I'll get any more viewers than I usually do. But let's get back to the news. Let's look at some video now. Let's go to CNBC and check that out. Can you see that on screen? They should be flipped over to that. All right, so what's making news today? That's too small. I can't read that. I'm too blind. Make that bigger. There we go. Netflix can see, so their video news. This is, I could refresh that because they might have some new videos. Let's see. Here we go. We've got some new videos up here. Let's see. Interest rates and inflation will be more volatile, says New York Life Investments. 3-stock lunch: Nike, CVS, and Health. So Nike's an interesting one. It's gone down a lot. We saw that Bill Ackman, he's a divisive figure. Some people don't like him, politically divisive. He's got a lot to say on X in particular. Writes a great deal about stuff. And he's in Nike, bought Nike as it went down. So will he come out on top there? That remains to be seen. I'm not going to click on this video. I'm not going to see but that's just reminded me of Nike. What do you think of Nike? Are you keen on buying that? It's when the market's really expensive, Nike's one of those stocks that's gone down. What is it? Another one's PayPal. There are quite a few big stocks that are actually gone way down, but are they value traps or are they good value? Remains to be seen. So hi to anybody just clicking on the stream and catching this through YouTube or wherever or Instagram or indeed on X. Netflix continues to push into live events despite issues. I didn't see that fight, but I saw a lot of people complaining about the quality of the stream. Did you watch it and did you have problems? Because a lot of people did. Will that affect the stock? I haven't checked actually what's happened to Netflix, and honestly, I don't really care. But I'm in as far as streaming goes. A lot of people know that's one of the things. I am invested in Spotify. Now, a lot of people have not been keen on Spotify, but I've been. I think it's kind of a next Netflix in a way, but totally different because they don't really make their own content. But I think I've been pretty keen on Spotify for a long time. It's been a roller coaster ride. It's with the US tech market, it's way up, so doing very well out of it. But I said on my Patreon video, which I do a weekly investing update for my Patreon members there, that I wouldn't be surprised if Spotify at some point got cut in half again, as this market, which is expensive. I mean, it's an expensive market, and a lot of people deny that, but if you look at the Shiller P ratio, I've talked about that before. I'm going to search that. I'll show you what I mean, because we're live here and I want to show you what the Shiller PE is all about. I just have to make it as small as I can. So here we go. I'll just share this. Can you see that? So that's the Shiller PE. If you're on a phone, you'll be able to see that. But if you're on, I don't know, it looks small to me. But if you see that, see we're up at there's only been a couple of times in history where the Shiller cyclical PE ratio has been, well, not cyclical, cyclically adjusted PE ratio it is. So it basically measures, in short, how expensive the market it is at any one time. And we are close, like late 2021 was a time when it was as expensive as this, and we all know what happened after that. We had that 2022 bear market. So it's not predicting anything. I'm not predicting that it's going to go down, because the highest it's been is during this dot-com bubble. You can see other high points in history, which were kind of obvious in hindsight, market peaks, right? So the dot-com bubble there. But what I keep saying is, all these people predicting what's going to happen to the market. You can't predict. Like, we could be, yes, it's high. Yes, it's expensive. 2021 was expensive, but we've got this AI boom here, and this was the internet boom. I mean, we could be like here, and this could actually go higher than ever before. So you just can't predict. You can't say it's going to crash tomorrow. It seems expensive. It could. And to get back to that dot-com bubble level would be really something, considering one of the things that we haven't seen yet, I would say, is we haven't seen the IPO activity. And Stan Druckenmiller, in that podcast, in that video, he said that he sees a yellow light, not really a red light at this point, after having years and decades of experience. And other people have said that Howard Marks, who has written a book about market cycles, which is a really good book, Mastering the Market Cycle, I think the title is. It's worth having a look at. That it's worth reading. It is. And so these people are sort of seeing it's somewhat frothy in the AI sector, but in terms of the market being overall expensive, we just don't know. This is why it's hard to predict. Like, crazy can always get crazier. I don't know who said that or where that quote's from, but I like that. If something gets crazy and you're saying it's going to crash, it's going to crash. It can, crazy can get crazier. There's so many examples. There's that famous example in bubbles. I love reading about bubbles. I've got a book here called Devil Take the Hindmost, which is about bubbles, market bubbles over history of financial speculation. And there's this famous story of Isaac Newton, who at the time, this was a long time ago, he got caught up in the bubble, the South Sea bubble, and he was widely known as one of the most intelligent, scientific people in the world at the time. Isaac Newton, and he was invested in the South Sea Company, the South Sea bubble. If you don't know about that, just look it up on Wikipedia, or one of the AI chatbots will tell you about it. Him specifically, he went into the dot-com bubble. The South Sea bubble. He bought into it, and he made a lot of money during that bubble by buying stock. And he made a fortune. He made his fortune in the South Sea bubble, and then he sold because he knew it was a bubble. He thought it was a bubble. He sold out of that South Sea bubble at a good time. I mean, say, I don't know when it was, but say he sold out like here, right? I don't know exactly in comparison, but say Isaac Newton sold out there from the dot-com bubble, and he'd made a fortune. He'd made his fortune, like he was set, apparently. Apart from his scientific endeavors, that's separate, but he was, he knew friends in politics. He knew friends in the market. He was well known. He had friends who had stocks in here. So he sold out, made a lot of money for those days. And then, but other people around him, and this is what happens, friends and neighbors still making money in the bubble as it goes up, and just a lot, because these things are going up, as Stanley Druckenmiller said, 4-5% a day when it gets to the peaks of these bubbles. There's a frenzy. If you were in the market in 2021, 2020, that was a crazy clown market. So you know what that's like. It's hard the FOMO takes over, right? And you want to jump back in. And so Isaac Newton did that classic thing. He got back in. He'd made a fortune. He got the FOMO from other people who were still in the market. He bought back in right at the top of the South Sea bubble and lost it all. He lost his fortune. So he was rich, and he I don't know if he died completely poor, but he lost his fortune in that South Sea bubble. So this is a long time ago. These things, market behavior, behavioral finance has not really changed, during that time. So that was a bit of a deviation there from, I just wanted to tell that story because we could be, in terms of the market, yes, it's expensive. Crazy can always get crazier. Could crash tomorrow. Nvidia could come in with shockingly bad earnings all of a sudden for whatever reason that we don't know about, or even slightly bad, and that could trigger a market crash. We don't know. It could keep going. It could come in with fantastic earnings. This AI, another breakthrough in AI could come along and just propel the market up. We could go way higher than the dot-com bubble. We just don't know. We can't predict these things. But it's a fascinating time in the market. It really is. And that's partly why I'm doing these videos, because I want to track what's going on. Now let's get back. Let's go through some of the news here again. I'll just refresh this so we can see the videos. I haven't even watched one video yet. Catch up with the news. So the market's closed. While I've been blabbing, the market's closed, and we are. Let's see where we might. So the SP 500 is up 0.39% for the day, and am I getting messages here? No. So S&P 500 is up 0.39%. Dow's down. Who cares about the Dow these days? 0.6% for the NASDAQ. And Russell 2000 Small Cap Index is up 0.2% for the day. So small cap's not doing badly. I'm going to just click on that because I want to see for the year where we are. In small caps, I'm most interested in small caps. So we're now 13.88% up in small caps even for the year to date so far. Not much of the year left. So obviously that's not as much as the S&P 500, but still pretty good. Still pretty good. And for the year, 28% up for the year. See, the Russell 2000 is now at 28%, 0.4. This is going for a full year. See, that's pretty healthy. It hasn't done well. So pretty much everything. Is it an everything bubble? I've heard that talked about. Seth Klarman says that we're in an everything bubble again. Okay, let's watch some news. Now the market's closed, let's sort of have some recap. I'm going to go through and pick out some interesting videos and that I would go through. Trump Media. Trump Media is in. Am I sharing that screen? Yep. Okay, good. Trump Media is in advanced talks to buy crypto platform Bakkt. Whoa. Interesting. I don't think I need to see that video, but that's interesting news. Interest rates and inflation will be more volatile, says New York Life Investment, blah, blah. 3-stock lunch, we saw that. Netflix fight, which was a bit of a streaming disaster, but there was a lot, made definitely Netflix getting into sports in that way, and these sort of idiosyncratic kind of programs, right? And easing regulation doesn't solve all for Tesla. So there's this report. I mean, I follow Tesla because my Art of Value channel's turned into kind of Tesla and Elon, because he's become so central to just this US society and business and markets in so many different ways. Anyway, so there's this thought that Trump will ease regulation on self-driving, automation, and it'll be easier, but I don't know. I have my doubts about that, because they can only go so far to ease regulation. If people start dying all over the place because the FSD, full self-driving Tesla, isn't up to it, and it's around, I think it's just over 100 miles between interventions, and that's kind of not what you want. So if you get a self-driving, if you get a robotaxi network and you're self-driving and you say you're around LA or whatever city, and you jump in and say they can go anywhere, and you have a serious accident that you have to intervene every 100 or so miles, it's not good enough. So like Waymo's, yes, it's expensive, but the rides are quite expensive, but also the technology is expensive. But they're up to tens of thousands of miles without any kind of intervention, which is pretty damn impressive. And that's where Tesla needs to get to for it to be viable. So if they can only ease regulations a certain amount, you think before. So I have my doubts about that, but it has been propelling Tesla stock higher on that kind of news, as well as Elon being close to the president-elect, obviously. And that's another thing. I mean, I could talk about Elon and Tesla all day because I make a lot of videos about that. But, these guys have got notoriously both big egos. They've both got thin skins. It's kind of well documented. Elon just goes berserk into demon mode sometimes. How long before they kind of snap at each other and it all goes pear-shaped? I don't know. We'll have to see. Feel free to comment on anything I'm saying. So is there further market pullback yet aggressive? Well, speculation again. Speculation, Your Honor. Market Navigator, buy now or pay later boom. Buy now, pay later boom. I mean, there's 2021, there was a boom. It has come down a lot, these companies. How to trade on Thanksgiving travel. That's for traders. I'm not a trader. I don't really care about that. I get these stories once a year on these events, like the Thanksgiving trade, the Halloween trade. I mean, the storm trade's an interesting one. Around the hurricane, I saw people doing that. I'm not into that sort of thing, but obviously, like generators and things associated with infrastructure that need fixing, sort of have a short-term spike. I mean, it's devastating what happened in the US there. Is it North Carolina? I'm not in the US, but people still suffering after that one. And are they going to become more frequent? We'll have to see. But that one, as I understand it, went places that no hurricane has ever reached before, or devastating to a degree that hasn't happened before. How retail could perform under Trump too? I mean, we don't know. All these are just predictive BS. Waymo could benefit big from eased self-driving rules. Could it? Let's check that out. I want to see what they've got to say about that. Okay, so I'm going to just flick over to just make sure we're here. So let me know if you can't hear this. It should be fine.
Tesla and other autonomous driving names are higher after reports that President-elect Trump's transition team is looking to establish a federal framework for self-driving cars, which could accelerate mass adoption of the technology. Deirdre Bosa is digging in a bit deeper in today's Tech Check. Deirdre?
So, Kelly, Tesla's biggest barrier to actually deploying robotaxis, it's not regulation, it's technology. The FSD software is still far from fully autonomous, and Musk himself continues to miss those self-imposed deadlines. So a federal versus state-by-state regulatory framework, even if that was to happen, which is, again, small chances, that is more likely to benefit the current and arguably underappreciated leader in self-driving cars. That is Waymo. Through June of this year, the Alphabet subsidiary clocked 25 million rider-only miles. That's fully autonomous. Today, it is completing more than 150,000 paid rides per week. It also just raised more than $5.5 billion, just open to the LA public, and it'll be available in Austin and Atlanta early next year. So Waymo is really setting the standard for the robotaxi industry already, and it's also very much developing for the current existing framework, which could give it a leg up if this were to go sort of national and be regulated at the federal level. A few weeks ago, I was at Google's Waymo garage in Mountain View checking out its next generation robotaxi. Kelly, I was surprised to see that it did have a steering wheel, even though there's no technical need for it because there's no driver. When I asked why that was the case, I was told that The current California regulation requires one, suggesting that they're aiming to deploy these, their next generation, sixth generation, by the way, vehicles sooner than, say, a Tesla or an Amazon-owned Zoox, which are developing robotaxis with no steering wheels. They still have to get that past the existing regulation. So deployment versus development. I also just had a conversation with Harry Kroger. He's president of automotive at SEMA AI. That's a startup that specializes in embedded AI. He said that
I'm going to comment on this afterwards. We'll just watch the video and I'll comment on it afterwards. I think there's quite a bit here. Waymo, I mean, they're definitely, there's an uptick, a bump in this kind of investment in this area. Waymo's been going for so long, owned by Alphabet, obviously.
Federal framework would help the industry at large, but he said it would not give Tesla any particular advantage.
You know, and Gene Munster is out there saying, you know, this is a massive opportunity. You know, basically, this is the best possible scenario Musk could have hoped for when kind of getting close to the Trump team. Others who I appreciate, Deirdre, are sort of poking at Tesla to say, OK, well, now that you no longer have federal regulations to blame, we'll see whose technology is really the best if it's going to be deployed in an accelerated way. And you're up against Waymo, and right now they're Waymo's numero uno.
Exactly. Not only are they...
So I've spilled some coffee here. I'm going to get a cloth from the next room there. There's a sink. But I'm going to play this. I can still hear it, so I'll comment on this afterwards.
You know, actually have a robotaxi fleet that you can book right now with your Waymo app in San Francisco or LA. But they're testing beyond the Sun Belt, right? I guess if you think that Tesla is a robotaxi company, you think that they are going to figure out the technology, as you know, someone like Gene Munster does, then this is really good for them. But they still have to get there versus a Waymo, which is very much proven, especially in relation to Tesla.
All right. Well, we'll get to see more, I think, of this the next few years, the way things are going. Deirdre, thanks very much.
So I haven't had a ride in a Waymo. When I go to LA, I will definitely do that. But I've seen videos of people, like, you know, point of view videos of people in Waymo, and it seems very good. They as they said, 150,000 rides a week, which is getting to scale, right? I mean, the cars are expensive, but you know, and Tesla's got their FSD. I'm still mopping up coffee here, by the way, sorry. And so, you know, Tesla's, as I said, their miles between interventions is nowhere near Waymo. And they want to have no steering wheel and no pedals, but it seems like that's going to be a while away. And as they said, Waymo getting, was it $5 billion in funding? You know, they're owned by, like, Google, Alphabet can fund this as long as they want to. They can fund it as long as they want to because of their search monopoly, let's call it that. That's what it is. You know, they can definitely, you know, it's been hemorrhaging money, but how, you know, it's sort of indefinite unless Google gets kind of disrupted in the AI front and they start to pull back. But it's one of their other bets that's sort of, in a financial sense, it hasn't worked, but definitely the technology is getting there, isn't it? It really is getting there. So, you know, as I said, when I go to LA, I've got a few things to do there and invest in investment terms, visiting some companies that I'm invested in and California. And I don't know when I'm going to do that, but I really want to do that. It's a long way for me to go. I'm in New Zealand. So this is like it's a 15-hour flight. You kind of have to stop in Hawaii on the way just to have a bit of a break. I'm getting too old to take these very long flights, but it's something that I want to do. So I don't know, maybe we'll meet some viewers over there at some point. Would be good too. Have some sort of meetup somewhere. I don't know. Yeah, California, maybe further afield in California at some point. I'd like to do that. I'm planning to do that. Don't know when. There's other things I have to do. I might have to go to Australia first, actually. There's a few things we have to do there. Including my son, who's possibly going to university there. I'm not sure. He's looking into med school, so we might be doing that at some point. But I do want to get to the US at some point. Really keen to do that. It's been a long time since I've been there, and I've invested quite heavily in there now over the past few years. So I do want to check things out, visit on boots on the ground kind of thing. So that would be fun as well. So looking forward to doing that at some point. including riding in a Waymo and checking that out. And, you know, some things about Tesla as well, their infrastructure, the charging stations and all that. We've got Teslas here and we've got all that here, but, you know, it's on a different level, different scale there, obviously. All right, let's see what else we've got that's making news in the video front. I thought that was interesting, that one. Deirdre Bosa, she's got a leather jacket on there, doing a bit of a gents in there, the leather jacket catching on, and Elon doing that too, but she looks good there. All right, let's see. The American dream of buying a first home has become a real challenge. No kidding. No kidding. If you've got any thoughts about that, let me know. It's a challenge everywhere. It's a challenge here where I am in New Zealand. We had a housing bubble, and I knew it was a bubble. It went on for way long. It was like 2016, end of 2015, 2016. We sold a house and bought a sort of tear down with the plans to rebuild, which we've done now. Sitting in a new house. We were building during the pandemic. Can you believe it? The supply chain, that's when we started building. It was hellish, and some things were more expensive, but we got there and really happy with it. It's the first house that, as a built a family home here, it's the first house that we've actually built, and it was a real experience, and learned a lot from building it during that time with unbelievable supply chain hassles and delays and all that stuff. And we were renting at the time, so 2 kids, it was just hellish. And that's actually when I started doing videos. The channel was kind of during it was 2022, March 2022 is when I started on the Outer Valley channel. We were renting. I started doing videos in my car. If you go back to the very first video I did on the Outer Valley, it was a terrible video, but I was actually in the bedroom there background, but I was doing videos in the car with terrible microphone. It's just the way many people start doing YouTube and start doing videos. But I've learned a lot, and now I'm in my own studio here and in a new house, so it's all very nice, and it's turning into summer. Blah blah blah. Okay, let's go. Let's see another video. I'm not going to go talk about. I don't know. Do we want to see that? It's doing well, that video, actually. American dream of buying a first home is becoming a real challenge. I don't know. 4 minutes, I guess. Well, let's just see what else there is. I'm a bit iffy about seeing that one. I don't really want to talk about home builders and interest rates. Battling wildfires with AI. Yeah, okay, I can kind of guess what that's about. The debate over recess appointment. Home builder M&A soars. Okay, so here's why. Trump picks Liberty Energy. I'm just going to look through these and see if there's anything that we want to look at that is kind of making news. The granddaddy of gold ETFs turns 20. Well, that will be GLD. I held that for a while. Probably too early. I did okay, but it was back. Well, I can't even remember what it was, but I did okay out of it. Before I went into some physical gold, which is in a vault somewhere, third party, and that's done very well, actually. And that would be something that I liquidate. That would be something that I liquidate if the market does crash and I want to go. It's sort of like cash equivalents to me, and it's more than doubled. So it's done very well. BMO, chart of the day. I'm just looking for something to watch. See, this is just another form of headlines, really. Trump team reportedly wants to relax US self-driving rules. Okay, let's see that. This is actually popular. Let's see this thing here. It's 2.7 times the usual. And so I do want to see that. Another one with Deirdre Boser.
Shares of Tesla rallying today as the incoming Trump administration reportedly looks to set up a federal regulatory framework that could ease rules around self-driving cars. It's not the only name seeing a boost today. Deirdre Bose has got more on that in today's Tech Check. Interesting headlines today, Dee.
It certainly is, Carl. So key for investors to keep in mind is that Tesla's biggest barrier to deploying robotaxi, it isn't regulatory, but rather it's its own FSD technology that is still far from fully autonomous and still requires driver supervision. Musk, remember, has missed his own self-imposed deadlines time and time again. So it is worth looking at some of the other public names in the AV space like Mobileye, Aurora,
So we'll just watch this all the way through. How long is it? And then I'll comment on it. It's obviously, we just watched that one on Waymo, and now we're going to watch one on the generally relaxing self-driving regulations. I have my doubts whether how much they can actually do this or what's actually for it to become unsafe. Waymo's fine as it is because they are fully self-driving. Tens of thousands of miles between interventions already.
Right, that's a
Tesla, not so much.
Chinese self-driving startup that went public on the NASDAQ last month. They're all surging today as well. But the current
What's that?
far and away,
I don't even know about
WeRide,
that.
that's a Chinese self-driving startup that missed his own self-imposed deadlines time and time again. So it is worth looking at some of the other public names in the AV space like Mobileye, Aurora, WeRide. That's a Chinese self-driving startup that went public on the NASDAQ last month. They're all surging today as well. But the
WeRide, WRD. Interesting. I'm just going to look up that while we listen.
Far and away, and maybe unappreciated or underappreciated leader remains Alphabet subsidiary Waymo. It, not Tesla, would likely be the biggest beneficiary from a federal framework if that were to happen. Now, through June of this year, let me remind you, Waymo clocked 25 million rider-only miles. Today, it's completing more than 150,000 paid rides per week. It also just raised $5.6 billion. It opened to the public in LA, and it will be available in Austin and Atlanta early next year. Simply put, Waymo is the one setting the standard for the robotaxi industry, while Tesla AV developments, they're still in its very early stages. And Waymo's real-world driving data and experience, that would give it an advantage in meeting federal rules, especially compared to newer or less experienced competitors. Now, that is all if Trump policymakers could actually successfully replace state-by-state regulation with a federal framework, which is already a highly complex process that would see no small amount of pushback from states and would require undoing a web of existing regulations. Now, Waymo has so far been successful in navigating those rules and developing its own vehicles and technology for the present. Here's an example of that. A few weeks ago, I was at the Google Moonshot Factory.
Okay, this is that other video was part of this one, so I don't think we need to see the rest. But that's interesting. In the meantime, I looked up that I didn't actually know about this. Maybe I haven't been following it so closely, not closely enough. But we've got WeRide here, Chinese autonomous driving, which has gone public. So the history of smaller Chinese companies going public in the US is not necessarily a good one, but apparently here it's at $5.03 billion market cap. I'll see what else I can find out here. WRD. I'm just looking this up because it's of interest to me in this self-driving space. Okay, so I'm going to flip over here to finchat.io, and if you're on YouTube, I am an affiliate of FinChat now, and you can get 15% discount if you want to sign up to FinChat. It's got kind of like a chatbot here on your Copilot. They call it prompt. You can ask anything about any company. It's pretty good, but we'll just look at some of the details, the overview here of WeRide. This is the first time, literally the first time I've looked at WeRide at all. So, and obviously with this kind of boom and booming market, they've gone public. It looks like in October 25th. So this is really new, and they're up. They're up 12.57% since the IPO, so that's not surprising. I mentioned before about the market being expensive, and one of the things that we haven't seen yet is a flood of IPOs. Remember during the SPAC boom in 2021 when that was kind of a bubble in terms of emerging tech bubble, I like to call that what that was. But we had meme stocks as well. We had other things. And we had literally hundreds of SPACs. And remember, Chamath Palihapitiya, Chamath Palihapitiya. He, the SPAC king, he was cool, which I think he knew what he was doing, ripping off retail investors. I think he's a grifter, and I know that their podcast is very popular, but I think they're kind of a bunch of grifters there on a big scale. Anyway, won't get into that. But we ride. So you know, if we're going into a bubble, if it is a bubble, the market's very expensive, the US market, and this is the final thing for me would be, you know, during that 2021 period, we had literally hundreds of IPOs of SPACs, which was a different kind of IPO, but there were literally hundreds. There were graphs at the time that I was showing in videos of like bubble graphs of when companies went public, and suddenly, like in late 2020, 2021, there was a massive amount of companies that went public. It can happen quickly. Investment banks cashing in for the companies at high prices. And so that's the thing that we haven't really had yet. After the election where Trump won, we did have a massive amount, I think it was $40-50 billion of retail money flooding into the market. And now there's a pullback. And so the last piece of the puzzle for me, one of the last pieces of the puzzles, just to say that that it's gone too far. Maybe it has gone too far already. You can't predict, but when we get a flood of IPOs, that would be like a big red flag for me, and it hasn't happened yet. But this is one of the ones that have gone public, so that's interesting. WeRide engages in development of an autonomous driving technology platform. It offers robotaxi, robobus, robovan, or robovan, as Elon calls it, and robosweeper. I don't know anything about this company. This is fascinating. I'm going to have to look into this. What I don't even know what their cars look like. So this is the thing about Chinese companies. There's a lot going on in China that you just don't know about, and that you don't get regular news about them. So market cap is 34.38 billion. Is that right, or is that in US dollars? Because that's a lot. Actually, that is not US dollars. So because it's gone public, not a great deal of information about it yet. We'll see how it does over time. And as I said, up 12%. So that's, what else do we have to do? Financials. Let's just check the financials. Total revenues. Well, they've got some revenue here. Total revenues 18.2. Gross profit 74%. I mean, some of the, kind of question some of the numbers on these Chinese companies, but operating margin negative. That's early days. They've just gone public, but if we look at their revenues, it goes back before they were public. 2022, 527, and it's gone down. Okay, I don't want to get too into that, but anyway. As I said, if you're into FinChat, there's a link if you're watching on your YouTube, it's not it's not on X, and it's not in Instagram, because, that Instagram doesn't have links, but I just threw that in there. But 15% discount if you want to join that, and I like it. All right. Let's see, where were we? So we've seen enough of that video. Let's go back to, sorry, not that one. This one. Let me share screen. Okay, let's see what else. How long have we been going for? So we're an hour here. So just to remind you, if you've joined before I said, I'm live doing this experiment. I'm going to be doing it for like a month, sort of daily, if health-wise, if it's okay. I felt like I've got a bit of sore throat this morning, but if if planning to do it kind of daily as the market closes on YouTube in this vertical format, so it shows up in the Shorts feed and on Instagram Live and on X. I'd like to do it on TikTok, but they won't let me go live there yet. I guess you have to have a certain number of followers, which I haven't done a lot of TikTok, but anyway, vertical format, I'm quite liking it actually. Hope you are too. So let's get into more of these, see if there's any other video news that we can catch up on. You might not be watching this, you might be listening to it, so forgive me if I read out more than I need to, because I know that some people are not necessarily looking at their phones. If they've got YouTube Premium or whatever, you can play it in the background, which I do. It's sort of like a podcast, right, for live. So you might be doing something else at this time. Hopefully you're not driving and watching this, unless you've got an auto, even with FSD, Tesla FSD, don't do that. Keep your eyes on the road. China's strategy will see a lot of continuity between administrations. Yeah, tension over guardrails at OpenAI, the usual. What a mess OpenAI is, isn't it? It's just a mess. I mean, could it be one? It's interesting. Like, it's not a public company, but obviously they've had. We've been cut off from. Well, I've been cut off from Instagram because they only allow an hour of live streaming. Instagram has disconnected the stream. Once you're, let me just read this. Sorry, they currently disconnect streams after 1 hour for most users. If you want to continue streaming on Instagram, you can remove this destination from the stream and re-add it. No, just forget it. So an hour, but we're still live on X and on YouTube, so that's fine. There's people watching, so we'll just carry on. So I lost my train of thought. I'm sorry. OpenAI, yeah, what a mess. What a mess OpenAI is. Could it be one of those companies that now it's gone profit for poor profit? It was a non-profit, right? And Sam Altman, people have left. Elia from there started a new company. What's it called? Can't remember the name of it, but so this is another sign of a bubbly, frothy kind of market where they got $1 billion of funding. He got $1 billion of funding pre-revenue, had done nothing, just to like that. That's a sign of a kind of frothy sector where people, I mean, he's got a reputation for being a core in OpenAI itself, but that's some froth there when you're getting billions of dollars to start a company without doing anything yet. That's another sign of some froth going on there. And it's a total mess. But could it be one of those companies that ends up making a lot of money despite bad management? Is AI so good? Is what they've got going there so good that it's just will make money no matter how incompetent the management is? And some companies like Google's kind of like that over the years, because their search is so good, the business model, the money making machine that they built there in the beginning for search is so good that you can have pretty incompetent management there and it will still make money. Or is AI going to disrupt that? I mean, it's got better over the years, right? But could it be that way, or would it be a bit of a commodity? It's basically Microsoft has sort of saved them. Microsoft's doing the best out of AI so far, and Google, we don't know, but this is pretty good. I use Perplexity. I've been using Perplexity more and more. That's a kind of startup that's kind of trying to disrupt Google, and frankly, it's very good. I use it instead of Google now. Like, I'm sorry, I'm on YouTube platform. Don't ban me because I've said this, but Don't shadow ban me because I've said I like Perplexity. But it's very good if you haven't tried it. If you compare these things, we're at the stage like this, aren't we, of just looking around, comparing things. But I've sort of gravitated towards using Perplexity on a regular basis because it comes up with answers that are exactly the answer, and it provides citations for links. So it'll give you 5 links of where it got the information so you can go and check it out. And I do end up going there. So that's OpenAI. So this is just giving me ideas to talk about. I don't necessarily need to see those. We don't necessarily need to see those videos. You can go to CNBC television on YouTube to watch these if you want to see any of these videos. Stop trading Robinhood, Kramer says. Reverse Kramer, does that mean so? Does that mean start trading Robinhood? May do well without Gensler at the helm. Why is he saying stop trading them? Maybe he means long-term hold then, I don't know. CVS Health adds 4 new board members. What to watch in NVIDIA's earnings on Wednesday. Shall we see that? That's a popular video on here. We might as well take a quick look at that. This is because this is the big. This is the big. This is going to be the big news for the week. Honestly, Wednesday is NVIDIA earnings. Join me for that, or the aftermath of that, whatever happens. But let's just watch this video. How long is it? It's just a couple of minutes, a few minutes. So we'll just watch this, and then I will react to it, give some thoughts on it. NVIDIA earnings coming up on Wednesday. It's a big one for the market. It's massive, isn't it? Whether it's if NVIDIA cracks in any way, shape, or form, it could just tank the whole market. We know that. But if it does well, it could be the opposite. It's just amazing, isn't it, what's going on?
This report from The Information that they're asking suppliers to change the server racks for Blackwell due to overheating. How much does it concern you?
It does not concern me very much at all. Look, NVIDIA went through this about 5 months ago. The thing with NVIDIA is NVIDIA is very quick to make changes. And this particular overheating issue with the Blackwell, that's already been played out, and the design was changed. So if we're talking about potentially a new overheating issue, we may be talking about Grace Blackwell, but I can tell you definitively that Jensen's not the kind of CEO that likes to make the same mistake twice. So I don't see this problem happening. Or if it is, it's probably not a meaningful issue because Jensen was able to come back, or NVIDIA was able to come back from the previous issue in less than 2 months.
But does it change the numbers if there has to be a delay? I mean, Jensen did tell CNBC, I don't know, a month or so ago that the demand for Blackwell was, quote, insane. So I don't think that's the problem, but the timing.
I don't think the timing changes at all. I think Blackwell is ready to go. I think Blackwell is fixed. And we maintain our tagline, you have to own NVIDIA into the Blackwell ramp. I mean, that's going to be the rosiest period of owning Blackwell is when
So I do have some thoughts on this. I'll get into them afterwards. And part of it is about what Tesla's been, or XAI's been doing as well.
Blackwell is ramping. So I maintain that we've had this overheating issue, particularly with Blackwell, and I think it's been addressed. I think we're expecting like tiny bit of volume to come through in the October quarter, and then substantial volume to come through in the January quarter. And that's the way we see it with NVIDIA.
Well, Harsh, we are going to get earnings fairly soon. So what are you looking for? And perhaps even more importantly, when we listen to the commentary around the earnings, what are going to be some of the key milestones that you're going to watch?
Yes. So historically, if we go back last 1.5 years, NVIDIA has been on this cadence of about $2 billion beat and $2 billion rise. So that literally the quarters are rising about $4 billion apiece. So for the October quarter, we're expecting slightly less than the $2 billion cadence. We're expecting about a $1.3 billion beat. And that's because it's simple. Blackwell isn't out yet. So the volume isn't there. When you get to the January quarter, Blackwell, we think will do somewhere around $6, $7, $8 billion of revenue. But you could potentially get two situations. You get extreme supply constraint. You could also get a pause in the H100 and the H200 complex, the older chips. Because, why would you want the older chip when the latest chips are available? So we're expecting, again, slightly less than $2 billion beat, but the numbers will keep rising. But when you get to April, it's a whole different ball game. Again, tagline, you have to own it when the ramp comes. Starting April, we see a massive ramp in Blackwell. We see the introduction of Grace Blackwell at the end of the April quarter, possibly the early July part of the quarter. And then you're off to significantly bigger beats than the 2 billion historical beats. So I would urge patience with all the volatility that we're seeing with the stock and focus on the ramp of the new products. The reality is, guys, there's nobody else in this space that does what they do as well as how NVIDIA does it.
What about supply constraints? Does that have the potential to surprise negatively?
yes, it has. It does have the potential to surprise because, like you said, the demand is insane. And that's, again, the word that I would use, going off of your sentence. They just won't be able to make enough potentially in the January quarter, potentially even in the April quarter. I suspect that they will be catching up for the rest of 2025 calendar to potential demand.
Okay. So he has not got any worry about NVIDIA coming up with these earnings again on Wednesday. So it's, there's going to be a lot of tense people, I think, in the market to see what happens. As usual, last few quarters has been like that with NVIDIA. I'm going to be fascinated myself to see what goes on. I'm not invested in NVIDIA at this point. As we saw, as I said, I made a video about Stan Druckenmiller, who sold out of NVIDIA. He said that was a mistake at the time, but he was trying to time the market, ride the bubble, and he got out too early. So it's anyone's guess how long this goes on for, whether they can kind of beat earnings, keep beating earnings. It's gone way up. One of the things I wanted to say about, we saw Jensen praising Elon for the XAI build out of their data center. I found that fascinating. I did watch a video about inside the data center. I can't remember where I saw it now, but there was like a tour inside that data center. It become infamous or famous for Elon putting that together in, I think it was 19 days, when it usually takes years to install all that data center. And they had NVIDIA gear in there, and so I said Supermicro gear as well, which is interesting. But they, he managed to secure enough supply from NVIDIA and install that. One of his famous surges, if you've read the book on Elon, the bio by Walter Isaacson, has these kind of surges that can get all hands on deck, pulls people from everywhere, and just goes almost 24 hours a day. But one thing, it wasn't quite the case. Like they said that they installed it in 19 days, which is pretty incredible when you see it and everything that's in there. But the infrastructure itself, the building and the cooling system, if you look at the cooling system, there was massive pipes, and so that was already built. The that took like a year before. So it was really just the installation of the hardware and getting that going in that 3 weeks, which is still incredibly impressive. But it did take over. If you took it all up, it's over a year, which is still very, very fast. And still an amazing feat, but it wasn't 19 days. It was like a year and 19 days or more. All right, let's see what else. Not sure how long I'm gonna stream for today. Not for too much longer. This has just been like a test here today. I think it's gone well, and so we'll just see. I just want to see more news here. It's been pretty easy to go for it over an hour here, an hour 12, but let's just see. I've got limited energy today because I've got a bit of a sore throat, but I am fully caffeinated. Still in good environment for risk in equities and corporate credit, says JP Morgan Santos. Still in good environment for risk in equities. Well, let's see what they're saying. Let's see. That's been a popular video, so maybe people want to see that. Let's just have a look. Oh, it's just to see that. I'll comment on this again afterwards. I like to see these videos all the way through before I comment, not interrupt all the way through like I have a tendency to do, especially in my recorded videos.
For more on the markets, I want to bring in Gabriela Santos, Chief Market Strategist for the Americas at JP Morgan Asset Management. Good morning to you.
Good morning.
And we've been on quite a ride. And so the question is, does the ride continue upward in a pace or not?
We have been in quite a ride for markets really over the past 2 years. Very strong performance for U.S. equities. We do still think this is a good environment for risk. That includes equities, that includes corporate credit. I just think there are two important questions for us that investors are already paying attention to. Number one is we seem to be out of the cyclical storm, all of the distortions from the pandemic. But now we're in the short term in a little bit of a policy fog environment. that can lead to some of a bit more choppy performance. So it's really all about the 3 S's. What's the scale, the scope, the sequencing of the policies of the new administration, and how do we counteract headwinds and tailwinds? The second big question, I think, is much more beneath the surface. If anything, it actually gives us more conviction that we'll continue to see some broadening out here from those early winners from the first 18 months of this rally. But I think it's less about painting things with one big brush stroke, and it's much more thinking about positives and negatives, which companies actually
The multiple has expanded, though. We're at 23 times. And so the question is, what is the upper limit of that multiple in your mind?
So I think there are 2 interesting questions here. In terms of the multiple, it's easy to just say, well, we're at 22 times, the long run average is 16 times, and so here we have a big multiple contraction to come. The truth is the index has changed a lot over time, 37%, very growthy, high quality companies. So the equilibrium multiple is higher now. That's a good thing. It helps provide a floor. The second thing is, of course, earnings, and you can grow into a multiple. And I think recently in October, we've seen some downward revision to earnings estimates, but so far nothing abnormal. And if anything, there could be.
Okay, I've got thoughts about that. She's talking about the whole market growing into a multiple. We'll finish here. I mean, I'll finish the video, but I've got thoughts, definitely.
Some upward revisions to next 12-month earnings based on different policies from the new administration, whether it's a little bit more consolidation in different industries, or whether it's corporate tax cuts that impact certain industries, and of course, the continuation of the soft landing that we have at the moment.
Political question. Do you have a view about what kind of Treasury Secretary the United States needs and wants, and how the market will react? And I was thinking about this earlier because in many ways, a Howard Lutnick kind of figure that like the tech world, like an Elon Musk might like, would be like an equity guy on the equity side. It could be, right? But in a way, Donald Trump ultimately is a credit guy. He's a debt guy. And you actually have to care about that piece of this in some ways, I would argue, potentially even more. And maybe that's where like a Kevin Warsh or a Mark Rowan comes in. But how does somebody who's sitting in your seat think about this?
So I think you've been seeing different reactions in different parts of the markets. All right. So far, we've been talking about U.S. equities, but we've also had a reaction to some of the fiscal and potentially tariffs and inflationary impacts on bond markets, which are up 70 basis points since we started pricing in a Republican sweep, and the dollar, which is up, depending on the currency, 5 to 9% since mid-September. So I think for equities, now is when there's a little bit of catch-up happening to the bond and the currency markets of starting to think through, all right, maybe there are some pro-real economic growth policies, but maybe there's also some uncertainty coming from other angles. All of this brings to last week when the market did start to react to a little bit of this policy fog. And here I think the markets, A, would just like an answer to start pricing in. And number 2, what kind of Treasury Secretary and economic, in general, appointments, and what does that signal between the balance of the tailwinds and the headwinds? And here specifically thinking about tariffs, which is something that the equity market hasn't paid attention to. So I think equities would prefer more steady as you go, a little bit more predictability versus the tariff uncertainty.
More on the market.
All right. So my thoughts on that. She said that, yes, it's expensive. So 22 times, or we saw this. I've shown this before. If you haven't joined, if you just joined or not joined within the last hour or so. So I showed the Shiller P ratio, which shows the market in general is very expensive in terms of history. Now what she said was that, she said sometimes it grows into the multiple. Growth companies grow into the multiple, so it seems expensive when you buy it. If it's a great company, growth company, it can grow into the multiple over time. You can get caught in that because it seems like a good deal, like during 2021 when interest rates were basically 0, and then they started to go up, and so suddenly the multiple looked expensive again. And so she's saying it can grow into multiple. That's quite a lot of hopium there to expect when you're talking about the whole market. This is not just she was talking about the S&P 500. So the multiples rise, and then the companies grow into it. Now we've got these Mag 7 that have done well, and they're making profits. Apple not looking so hot right now, but Nvidia, people say it will grow into the multiple. It keeps coming out with these incredible profits every quarter. Has been a cyclical industry, so that could turn too. So to hope that something can grow into the market can grow into the multiple that it is now is assuming that everything is going to go perfectly. And she did say that it could crash or things could have a bear market. And during that time in 2021, we saw that where the overall multiple went really high. In fact, the second highest in history. And then we had the bear market, which, what was it? Like 25% at the most, down to around October 2021 was the bottom of that bear market. And then we had the trigger for that, which was the trigger for that made it take off was ChatGPT coming out. It was almost to the day where that came out. There was a lot of tech enthusiasm, and the market took off, and it hasn't looked back since then. We've had political events, we've had other events, we've had wars, we've had lots of things, but really the US market has been roaring on the back of AI. So this is why Nvidia earnings this week is so important. It will be so interesting to see what goes on there. Now, I've got another video here that I want to get to that I was just scrolling when that was during that time, looking for the next one. And what I found was, I just mentioned Perplexity before, and there's a short interview here, which I'm going to play from the Perplexity CEO. Did I share the screen? Perplexity CEO on new AI-powered shopping assistant competition in AI space. So I really want to see this. As I said, I use Perplexity all the time. I use it all the time. So it's really good if you haven't used it. I'm saying this, and I do use Google as well. I'm on YouTube and I'm on Google, and so do use Google as well. Don't shadow ban me because I mentioned Perplexity. But here we go. Let's listen to he's an impressive entrepreneur, I think. And actually, Stan Druckenmiller invested in Perplexity. He said that in a private company. It's not. And we'll have to see. As I said, when the market multiples go up, we tend to get a lot of IPOs. That WeRide has been a recent IPO. We haven't seen a big flood of IPOs. That's the final. That'll be a final piece in the puzzle for me. Is if we're getting into going from frothy to extreme.
Welcome back to Squawk Box. Got some news from Perplexity AI this morning. The company launching an AI-powered shopping assistant that should help it with consumers as holiday bargain hunting ramps up. Joining us right now to talk about this and the broader competition in AI, Arvind Srivastava is the CEO of Perplexity AI, and we love having you on the broadcast. Congratulations on the new launch. Let's talk about that piece of it, and then let's get into the broader sort of question of where things are. OpenAI recently releasing its own search product. How important is the shopping piece for you?
Yeah, thank you for having me again here, Andrew. So shopping is really essential because it's just one of these verticals where strongly you convey that all these AI products are moving beyond just giving you answers, right? A lot of people say, oh, which AI product should I really use? They're all looking like the same. They're all giving me answers. Some use the web, some don't. But you need to actually enable actions. What do you do after an answer? Purchase, a transaction. So all these products need to get there. So shopping is the first step for us to actually get there, and we're very happy to be the first to do that. Where at Perplexity now becomes a one-stop solution to not just research your products on what to buy, but you can actually go and buy it right there natively on the app. So with one-click buy, which is revolutionary in e-commerce even 20, 30 years ago, we're bringing into AI products, and we're giving free shipping for all people, and they can just take their phone and like point it at some product that they want to buy and just ask, where can I buy this? And they can just get it right there. And this is really powerful. So people can just compare, ask questions they could never ask before, like help me build a library or help me host a disco party. What all do I need to buy? And you just get all the products right there. and compare and all the reviews are surfaced from so many different parts of the web, and you just fulfill your transactions right there.
Well, that's what I was going to ask about. What products you surface, what products you don't surface. Obviously, Amazon has its own search business inside its own platform. Can you get Amazon products on it? Are you, I hate to use the word scraping, but, when you look at reviews on other sites and you're pulling that, is everybody allowing all of this to happen? Are some going to block you? How's it going to work?
Yeah, so we are also introducing this thing called the merchant program, the Perplexity merchant program. And we're inviting merchants to work with us because we think consumers love this, and that's always the long-term correct direction. And so if we can collaboratively build this next generation shopping assistant for all customers, where merchants can bring their catalog to us and product specs and help in the checkout flow, that way we can provide this experience to everybody. And we're already working with Shopify. We're enabling people to check out products on Shopify through Shop Pay and bringing it right into our search results.
I mentioned Amazon because Jeff Bezos is a very high-profile investor in your company. Is Amazon involved, and do you think that they will be?
We're not yet ready to talk about who's currently in the program, but we're happy to work with everybody, and that includes Amazon too.
Let's switch gears for a second and just talk more broadly about the search business.
Got lots of thoughts on this. I'll react to it afterwards. Let's watch the whole thing as usual,
if you will, and how AI relates to it. OpenAI recently announced its own search product. How do you think about that product versus your own product versus what you're seeing now from Google with some of the AI features that it's added?
Yeah, like I said, all these products are currently very similar in the minds of the average consumer, or they're all giving me answers to questions, right? I think you need to go beyond that. You need to provide real-time information on verticals that matter in everyone's lives, sports, finance. We did the election hub when the elections were going on. Today we're doing shopping. We're enabling not just information, but actions, transactions. So AI products need to move to a direction where commerce and businesses and consumers transact with each other, and everyday information is provided in a much more end-to-end workflow and custom UIs. So that's what we are working on, and we feel like we are ahead of everybody else in that direction. And I think that's what we need to keep doing more verticals, travel, finance, a lot of things need to be done here.
I think this company is impressive, and as I said, I use the product all the time, and I haven't seen the shopping thing yet, and I don't know if I will because I'm not in the US, and it sounds like it's working with US providers, US shopping. It's a whole different ball game when I'm on the other side of the world, so I wouldn't expect that to come for a while. But I didn't actually know that Jeff Bezos was an investor there. I know that Stan Druckenmiller is an investor in this company. So some big heavy hitters in this company. And as he said, they think that they're ahead, and that it's really impressive product. If you haven't used it already, I'd recommend having a go at it. And for a startup, and they're obviously well funded during the boom, and it's a lot of water to go under the bridge in terms of who's going to win this space, which players will win, but it is pretty impressive what's going on with them. I think I really, so that was good to see. All right, let's see if there's anything else here. We're getting up to the hour and a half. I think I'm probably just going to go for about an hour and a half today. The very first show. Thanks for joining me. If you were joined during the stream here, however you found it. I got cut off after an hour on Instagram, but we're still on YouTube. We're still on X Live in this vertical format. Always experimenting, always innovating. I like to try different things, and I'm going to try this for about a month and see how it goes. If it goes well, I might continue. If I've got the energy for it. This is my morning cup of coffee and going through the news. Roblox announces new safety features. Face safety features following Hindenburg's short position. So they were, questioning because the kids platform, but I haven't looked into it. It's not one I'm very interested in. The wrap up for Monday, future of health. Oh, here we go. The Trump trade is still intact, says Fundstrat's Tom Lee. Oh, come on. Let's listen to Tom Lee, I suppose. Okay. I don't like his predictions, but he continues to be fairly spot on. But, people like Warren Buffett say that these people come and go in terms of predicting. He predicted that Bitcoin was, I think he said 150,000 by end of year, or 100,000. He's at least getting close to that. So his run is continuing. Let's see what he's got to say.
It's now Tom Lee, head of research at Fundstrat Global Advisors, as well as a CNBC contributor. We can get to Bitcoin in a second. I want to talk just about the overall markets, Tom. And you think leading into Thanksgiving that slow sort of bleed. That with slow bleed last week in the markets, you expect that not to be lasting, and multiple factors make you feel good about the next couple of weeks. And one of them, which plays into what we've been talking about all morning, is the Treasury Secretary announcement. Will remove some uncertainty. You're following Polymarket to see who's and what. Bessent was at 70, but then Musk tweeted about Lutnick, and his chances went up. What is it now?
They've both fallen to sub 40%. So part of it is Kevin Warsh has moved up and Mark Rowan has moved up.
We're using Polymarket to decide who's going to be the Treasury Secretary.
Stranger things have happened, right?
So you think we hear this week, and that'll remove uncertainty, or that's not the most important thing?
Well, I think as we remove uncertainty, so it may not be announced in the next week or so. I think that's like what I'd consider a clearing event. It takes away some uncertainty, and the Trump trade, I think, is still intact.
The Fed might not cut as quickly as possible, but you still said we're in a good place, dovish-wise.
That's right.
So again, I'm going to react to this afterwards. So this was 7 hours ago. It says, so before the market, sort of during the market, I think the Trump trade is still intact.
Last week, markets were a little taken by surprise when Fed Chair Powell said he might, slow things down for December. But if you look at December 2025, a year from now, the number of implied cuts is still the same. So I think he's dovish. He's just moving some of the timing.
Another clearing event, NVIDIA. You expect it to be a bullish clearing event?
I mean, most likely, I think markets get very hesitant in front of NVIDIA's earnings.
Really?
And once that's behind us, we'll see demand is strong, and I think market breathes a sigh of relief.
And then we did get a little bit maybe bullish or over our skis, so we pulled back to a support level where you feel more comfortable.
That's right. I think most of the major indices have pulled back to what would be technically viewed by our technician Mark Newton as support. So the NASDAQ is on the support line. S&P did a 60% retrace of its recent rally, and small caps have held above their prior highs. These are all bullish support levels.
I was wondering whether things were getting overdone when the journal says a melt-up could be in the cards. And the Trump trade has already been going for a while. You think it's just getting started at this point? There's a lot probably for the markets to like, I guess, in terms of, he likes easy money, he likes low regulation, he likes lower taxes. There's a lot. It's more than a 2-week rally, maybe, in your view.
That's right. And I think maybe markets are course correcting because now with DOGE, the Department of Government Efficiency, there may be cuts to healthcare and industrials because of defense spending. So things that investors can focus on more deregulation of animal spirits, more like small caps and financials.
All right.
What about healthcare? You mentioned that in particular. It's not just DOGE that's going to be looking for more ways of efficiency. It's also changes afoot with RFK Jr. We're going to speak with Mark Bertolini about that in a minute. But how does the market kind of weigh that out?
Yeah, I think it's going to be a tough period for visibility for healthcare because, even recent comments about how much healthcare spending dominates advertising when you're not in the political cycle. And you're right, there's concerns about safety of certain vaccines and RFK being in charge of HHS. So I would just say there's clouds. There's still going to be opportunities probably in biotechs, but it's going to be challenging.
Okay. Interesting. So, so the Trump trade is still intact. He talked about small caps still being good, Bitcoin, all the usual things that he's always bullish. Perma bull, you could say. is Tom Lee, and he's been pretty much right so far. You could pick apart things, but in a bull market, everybody's a genius, and he does make a lot of predictions. And we'll just have to see how it goes over time for him, but it's always interesting to see what he's doing. And let's see. Some of these have been pretty popular videos today. NVIDIA proves the AI revolution is alive. Yeah, we know that. Miller, I think this is overreaction. We don't think HHS changes will affect us. Who's us? Healthcare sector. Okay. Well, yeah, there's been a lot of not crashing, but definitely some dips in healthcare stocks, right? Trump taps right for energy, reducing spending. Okay, I'm going to refresh this page because I want to see what the latest news is after the market. If there's anything here, it's usually Kramer going on. We haven't even looked at Yahoo. So today, this is the first episode. If you're just joining now, there are people still here, and they're getting more than they have been. So I appreciate that. Maybe the algorithm's picking it up, especially on YouTube. But I hadn't intended to go for a long time, but an hour and a half so far. But I might go for longer tomorrow. I'm intending to do these on a daily basis during on market days the market's open, but maybe I'll go for a while longer. See what's going. See, the viewers seem to be climbing after an hour and a half, so it's going well. I'm enjoying this, and I'm about to run out of coffee. I'm going to need a bathroom break. So tomorrow I might do longer. I might start earlier. I might start earlier tomorrow. I started about half an hour before market open today. Tomorrow I might start earlier. So I'm not going to schedule it yet. I'm just going to go live and see who's listening. But do join the channel if you want to get. I don't know if you get motivated. I don't even if you are subscribed to the channel. I don't know if you get notified. I assume you do. If you turn notifications on YouTube, I assume you get notified. On X, you can follow me on there. It's like we're live on there too, on X and on Instagram, which gets cut off after an hour. Instagram live. What are you doing? Instagram live. Let me go for longer. And TikTok, we're not on live yet. I don't have enough followers, but I'd like to go live there too. Anyway, back to that. Also, not also, let's just see. So yes, the latest news here on CNBC anyway. Tomorrow I might get into Yahoo Finance News and Bloomberg and all that too, but what's making news today? I've got other work to do today, so I'm going to finish soon. Goldman Sachs, Sung Cho is bullish on software in 2025. Software hasn't had a super great year because there's been these thoughts of AI is going to kill software, which, remains to be seen. We tend to overestimate in the short term and underestimate in the long term, which I do think is the case with a lot of technology. We pull forward earnings. We pull forward a lot of value that happened in the dot-com bubble. I think it's probably happening with AI now, but in the long, short term overestimate, long term underestimate, and I do probably think it's that case with AI. There's a lot of scenarios that could play out with AI that some of them are scary, as Elon's talked about. Trump media has advanced talks to buy crypto platform. Okay, so we haven't got a lot of news there. Let me just look over. I would like to look, because this is me. I'm going to look at what's going on, what the Yahoo News is. They have some good videos, honestly. I quite like not just CNBC. So let's see what their videos have been, or let's see what their news has been for today. It's usually pretty similar, the kind of news they have. NVIDIA Q3 earnings, all eyes will be on AI. So join me live. I'm not sure if it's after market with NVIDIA or during the market or before market or when it is, but anyway, if it's the aftermath, I'm going to be covering it here because it's the big one for this week, isn't it? The 300-pound gorilla in the room is NVIDIA. And what will happen to the market? Will it could go either way, or it could be nothing, but it's going to be, well, it's going to be something, let's say. Let's just put a pin in that, as they say. All eyes will be on Nvidia demand growth. Yes, indeed. That's a 5-minute clip. Do we want to see that? I'll put a pin in that and just see, because we may just end with that and then come back. Wednesday's the day, which is Thursday for me, because I'm living in the future down under here. We're the first to see the sun where I am. New Zealanders first to see the new year, first to see the sun, all that. And it is a nice day today. Trump considers eliminating EV tax credit. Yeah, there's some, yeah. More important health benefits for each generation. So as I said, I'm going to read these headlines out, because some people are listening here, not necessarily just eyes glued to me. If you're on your phone, because it's the vertical format, you may even be driving. Hope you're not looking at the screen if you are. And mortgage rates still underlying home affordability problems. Retirees should focus on income amid new White House. Focus on income, retirees, okay. And NVIDIA earnings again, yes. 3 things to know about NVIDIA earnings. Why this analyst is bullish on NVIDIA. NVIDIA must get back to double-digit beats, portfolio manager says, and that's been a popular, excuse me, that's been a popular video. Must get back to double, like this is getting a big ask, isn't it? As we say here. It's a big ask, mate, to get to double-digit beats again. I'm going to put a pin in that, and we'll scroll, but we might look at that video just to as a brief upcoming for the week of NVIDIA earnings on Wednesday. Great global growth in markets. 2025 will see great global growth in markets. Well, that remains to be seen. Strategists, there are so many of these investment bank strategists, and they're basically predictors of what's going to happen. And if they predict correctly, they get paid more and more, get promotions. But they can go. There was one instance of a guy who was, I can't remember his name now, but 10 years, and he'd done well out of 10 years. His predictions started to go badly, and he got the chop. But he's probably set for life with the money that he made from that 10 years. Trump expanding candidate list for Treasury Secretary. Okay. Actually, when I said he was probably set for life, let me caveat that with, and I know this is the case from people in the industry, that they, these people, there's one report lately from about Jane Street. Okay. So analyst there, an intern analyst, $250,000 a year the first year, and then it goes up to, after being there for a few years, to $1 million, and then bonuses. And like, the thing about these people who work in that sector is that, in the finance sector, in investment banking in particular, as analysts or whatever, strategists, whatever, is that they make a lot of money, but they also spend a lot of money. So say if they're in New York on Wall Street, they want the nice apartment, they want the Hamptons house, they want this and that, and they're in that peer group relative to each other. So they end up spending a lot of money. They, to make X million dollars a year and spend X million dollars a year. So, but rather than just saving it and sort of saying, okay, this may not last forever, if and having a good life and saving a lot, investing a lot, they spend a lot. Trump expanding candidate list for Treasury Secretary, so that crypto rally could become a rout if Trump doesn't deliver. No kidding. Q3 earnings preview 3.4. Okay. 2 minutes. Shall we look at that? Let's look at that. I do want to do one earnings preview just to it is a big week ahead. That's what they're starting with. Let's go. Okay, let's look at this. It's a couple of minutes, and then I'll briefly comment on
We've
it.
got a big week ahead. We'll finally get the earnings that we've all been waiting for. The bellwether, NVIDIA, of course, the poster child for the AI trade. You're seeing shares pre-market on this Monday lower. As of right now, there are a few other big reports that, of course, are going to come up. But it's really NVIDIA that takes up so much of the attention because of the fact that it's driven this theme that the market has piled into. And the markets have a larger question of what that longevity looks like from here. It's going to be interesting to see exactly what this $3 trillion market cap company has to say later this week.
It's a big one in terms of market cap on the S&P 500 and why it's one to watch. Taking a look at the options market pricing heading into this earnings print from NVIDIA, the stock has moved about 9% on average following earnings previously. That's according to Citigroup. Options traders, this is typical for a number here around NVIDIA earnings. Options traders pricing in about a 12% move to either side following these NVIDIA earnings. And remember that this is a stock that has already doubled over the past year, tripled the year prior because of those GPUs powering the AI rally. So will we continue to see that demand moving forward here, Brad?
Yeah, 100%. It's going to come down to what they have to say about the future of the data center as well. One of the more interesting things that we've heard kind of quarter over quarter here is about how companies are going to need to power the data center of the future. The amount of chips that are going to be necessary in that data center for all of the inferencing technology and the AI stories that are annexed to that inferencing technology. Well, for NVIDIA, they've been able to tell the markets exactly what the markets have wanted to hear, but a lot of larger questions around whether or not for Jensen Huang and the rest of the crew over at NVIDIA, if there is more in terms of the purchase orders that investors can start to price in, because now we're trying to figure out what exactly that baseline is for recurring annual orders and recurring annual revenue that we can expect from the growth that they've seen this far. The growth that they've seen is, as our own Dan Howley was talking about, it's tough to top when you're saying one quarter, hey, we've seen 200% growth, or hey, we've seen 150% growth. At some point, you face some tough comps in that growth, and that's, I think, what investors are really trying to wrap their minds around too.
Right.
Yeah, that's true.
Even if the growth story is continuing, it's been going down over the past 6 quarters. The deceleration, there you go, Brad, thank you. So will that deceleration already be priced into this earnings print, or will we see some pain on the other side? That is, of course, the big question here.
We've got a big week ahead.
So we'll have to see what that happens. As I said, Wednesday's the big day for that. And we may watch one more. There was one about NVIDIA too. NVIDIA must get back to double-digit beats. So, the comps, the comparisons get very difficult, don't they? They get very difficult when it's been going up like this. But bubbles, as I said, crazy can always get crazier. And so this is going to be a fascinating week. Let's see what they've got to say here. This is a longer clip. I might not play all of this, but let's just see. I'll share that with you. And let's see, this is more about NVIDIA earnings Wednesday. Join me live for a roundup of what goes on for that. It's going to be a good day. And I am planning to do these every day. If the audience builds, I'm planning to do these for a month as the market, on market open days. Just so join me here live if you want to. And subscribe to the channel. If you're on YouTube or on X, subscribe to me there. Even on Instagram Live, we're going to do that there. The Art of Value. I think it's The Art of Value Invest on Instagram. But let's see what they've got to say about NVIDIA for the upcoming earnings.
NVIDIA shares are lower ahead of its earnings out Thursday. A report from the information saying its new Blackwell AI chips are overheating in its servers. That's weighing on the stock this morning, down just about 2.5%. So will NVIDIA's results live up to the high expectations and turn this current stock move around? Joining us to discuss, we've got Paul Meeks. He's the portfolio manager at Independent Solutions Wealth Management. Paul, it's always great to chat with you here. What are you expecting heading into this earnings print? Is the current pressure on NVIDIA's stock something that sets them up better for a pop after those results?
We'll see.
Yeah, I think they're going to have a nice beat, but here's the problem, Madison, and I got this data from the analysis tab on Yahoo Finance. 4 quarters ago, the company beat the Street's EPS estimate by 19%. Next quarter is 11% beat. Then it goes down to a 10% beat. And then the last quarter was, quote unquote, only a 6% beat.
Yeah.
So a lot is expected of NVIDIA, and they're going to have to beat the estimates by even more. Let's get back to a double-digit percentage increase beat. And then I think people will feel more comfortable. In the meantime,
Keep doing that.
Today's issue about potential overheating and the Blackwell chip, it's obviously not a positive. We also don't know it to be true. And you may recall a couple weeks or months ago, there were similar kind of manufacturing glitch issues, and that actually brought a good opportunity to buy the shares. Right. And so if this stock backs down to the 50-day moving average price of about 130, I'd probably buy it with both hands. As to the quarter they're going to announce Wednesday evening, I think it's going to be great. But as I said before, it's got to be a bigger beat than they have been beating the last few quarters. I need to see that. In the meantime, I have a third of my portfolio in this stock, and I feel good about that.
Paul, what are you expecting to hear on the demand pipeline front?
Oh, I think the demand's going to be very, very bullish. And that's no surprise, Brad. You think about all of the other companies or customers in this AI, GPU supply chain.
Portfolio management. Third of the portfolio in NVIDIA. Wow, they're writing it. They'll be on tenterhooks when the earnings
have been raising their CapEx guide, have been very bullish about their own demand. And so I think that is not in question that we will have a very bullish demand picture. And that's why I think, Brad, that if we do have a short-term manufacturing glitch, because nobody else is as close as they are to making these chips, you buy it because the demand is there and they'll fix their problems.
But it's interesting, we've still seen 6 quarters of growth deceleration in the stock, Paul. At what point is there something that stops the momentum for NVIDIA? Is it that lack of further growth as a catalyst, or is it something potentially more insidious like a competitor coming in?
I don't think it's really going to be a competitor. I do expect AMD to get its act together and be a viable second source, but it's also interesting that in the last couple of days, AMD announced that they're firing 1,000 people, which is pretty large, 4% of the global workforce. So we do know that that company's problems are more CPU related, but still, I don't think that they're going to close the gap. So it'll be a big market. AMD will have a slice of that pie. NVIDIA will continue to have the biggest slice of the pie. And what would happen is, and the greatest tell would be, when you start to get the capital expenditure budgets from the hyperscalers, the guys that are building these big data centers, and they start to rein in their CapEx. In the last couple of quarters, they've been increasing their CapEx. That'll be the tell to look for.
At what point would we be able to tell, and investors out there really be able to discern when NVIDIA's shifted from a valuation front-running position to then growing into a valuation? And how does that kind of show up in some of the metrics that we hear on a quarterly basis, at least at this juncture?
Yeah, well, what I tell you, Brad, is I know most people say, okay, the stock tripled last year. It's working on a triple this year, so it must be overvalued. But if you take a look at it, it's trading at 30 some odd times next year's earnings, and that's probably a relevant growth rate for the next couple of years. So it's trading at about PEG parity. I actually look for stocks trading at that range as tech values, or at least relative values. So I don't think we have a problem with valuation. I actually think valuation can expand. But again, it's all going to be about, oh my goodness, the hyperscalers have reined in their capital expenditure budgets, and that's going to back into less demand for NVIDIA's GPUs.
Paul Meeks, always a great...
Yeah, so that's a good point. Just a recap of that, or some thoughts on that. You know, the main point there was these hyperscalers. So he's talking about Meta and those other Mag 7s. If they rein in their capital expenditure on AI, on NVIDIA chips, we've seen xAI, Elon going in, building the massive data center very quickly. When that cycle comes to the end, when they think that they've built enough data or big enough AI data centers, they've at some point got to get return on their investment. And there's been literally hundreds of billions of dollars that they've been building out this AI infrastructure. At some point, that's going to slow down. So, and when that happens, as he said, there'll be a signal in earnings when that's happening, when their customers, they're the main customers, they're big customers. When that slows down, there's been effectively seemingly unlimited demand, but that can not go on forever. Can it? Can it go on forever? You know, Nvidia is the main player. He talked about AMD there catching up or not getting its act together. These things take time. You can't just instantly build these factories to churn out these chips without significant. Nvidia's been doing this for years and years and years and years. So you know, some people saw that coming or didn't know when, but you know, these plans, it's not instant. You can't just churn out these products like they're packaged candy or something. They have to be a significant amount of planning, investment, and so this is what these hyperscalers, as he said, have been doing. And will that slow down in time? We'll have to see. But Wednesday is earnings day, so I've still got maximum people watching here. I'm grateful that you're watching this, the first episode. I plan to do this sort of daily on a month in this vertical format so people can see it on their phones. And, you know, the algorithm, YouTube in particular might pick it up. But we're live on X, we were live on Instagram, but they cut us off after an hour. That's what they do on Instagram Live. I want to be on TikTok, but they won't let me be live there yet. Need some followers on there. But there's still followers here, but I'm coming up to the 2-hour mark. Join me tomorrow. I'll be planning to do this tomorrow. I'm not going to schedule them because I'm just going to go live. Pretty much more casual here, but I'll go through the news. I'm looking at videos, looking at the news of the day. So join me for that. I do that anyway. I'm a long-term investor, but I do want to see the daily news and what's going on, especially when the market is somewhat frothy and expensive in the US. We've got significant events like Nvidia news coming out. This is getting towards the end of earnings season now. We've had some significant ones, and the market. We've had the election. We've had that so-called Trump trade. It's been pulling back. A lot of retail money's gone into that Trump trade. So will it pull back? There's a lot to be seen on a daily basis, and I'm going to be doing these daily shows. Join me here in the vertical format. But today, that's enough for the first one. It's been coming to 2 hours. I am going to do these multi-hour streams so you can just listen to it in the background if you've got, say, YouTube Premium or watch. I welcome you to do that, to join me here. I'm pretty happy with how it went today. The audience is, I mean, there's still quite a number of viewers here for the first episode. I wasn't expecting much. Might have been expecting 0, but that's not the case, especially because a Stock Chat Show channel is only like 300 and something subscribers so far. Do subscribe if you want to follow along. You'll get notified when I go live, and you'll be able to join me on your phone here in this vertical format, or indeed on desktop. It still works. And doing this on a daily basis until further notice, and hopefully it'll go well. So thanks for joining me today. I really appreciate everybody who's been watching, and join me tomorrow. That's the plan. We'll see how it goes. I'm actually feeling better. I had a sore throat, but I'm feeling better and fully caffeinated now, but I need to go and do something else. But join me here today. I might be a bit earlier tomorrow. It's a bit late today. First one, I had to get all the technical stuff going, but might start a bit earlier tomorrow, but coinciding with the market close, leading up to the market close and going after the market close, so we can get the news from the day and what's been happening. And of course, this week, the big one is Nvidia on Wednesday, so join me for that. So thanks everybody, and I'll see you in the next one. I'm going to end the stream now, so thanks. I'll see you again. End stream.